Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader, and I'm here with your Cabot Weekly Review. So since I did the video 2 weeks ago, Tyler did a great job last week. In the last 2 weeks, obviously, it's been a mess for the market, although this week's not too bad as I record this late Friday morning, September 30th. The indexes are down maybe, say, 1% on the week, but that does make 6 out of 7 weeks on the downside as a lot of these indexes are either retesting their May-June lows, dipped a little bit below it, a little bit above it, that sort of thing. So we'll see how it goes. There's been a lot of stuff that's been going on in the world. Obviously, the hurricane. First of all, I hope everyone who's in that path is okay. If you're listening, I hope everything can get fixed up real quick. But, hurricane, pipeline, sabotage, UK gilts, obviously the Federal Reserve, junk bonds, mortgage-backed security. There's been all sorts of stuff going on, but really nothing's changed with my thoughts. The intermediate and longer-term trend of the market is down. Same thing with most stocks and sectors. I think about 85% of stocks are below their 200-day line at this point. And so there's nothing really to do unless you're trying to jump in and out every day or two. But as a position trader, it's just about, keeping it safe and all that. I would also say some of the other things I said still hold true. There's still a lot of stocks, not as many as 2 weeks ago. We did see some high relative strength or some resilient stocks did crack to some extent. But I still see a ton of stocks that are well above their May-June lows. They look like they've already discounted whatever's coming. They're ready to get going if the market does. I still see a lot of those names. And then when you're talking about secondary indicators like sentiment and, whether it's surveys, money flows, I don't know, put-call ratios, or just anecdotal evidence, I'll just say the environment is ripe for a market bounce, if not more, in terms of, that sort of sentiment and background indicators. Doesn't mean it's going to happen. We could keep going down for 3 months. But, I think it's just one of those times where you just have to respect what's going on in the market, be cautious or defensive or whatever you want to call it, but also just keep an open mind. Let everyone else talk about mortgage-backed securities and Europe's upcoming winter crisis and the Federal Reserve and all that. Let them do that. And we'll just kind of take it day to day, week to week. And so when the market does turn, and the market's going to turn 3, 4, 5 months ahead of any good news, when it does turn, we'll be there to make money in the stocks, okay? In Cabot Growth Investors model portfolio, we were 2/3 in cash for a while. We're up to almost 80% cash, a little bit below that as we kicked a couple things out. I'm not opposed to a nibble, but in terms of any buying and size, I'm not going to be doing that until the market at least stabilizes, if not, obviously produces some green lights on the intermediate term front. Okay, let's hop into the charts. Enough of a preamble. As usual, I'm using a program called MarketSmith. You can learn more at marketsmith.com. It's a product of Investors Business Daily. Get my line pen out, and we'll just run through the indexes here, get my notes. So, the Nasdaq, a lot of these indexes were just kind of right back to the May-June low. There's a couple ways to look at that. Number one is it's not good, which is, really the trends are down. We're well below 50, 200-day lines, even the 25-day line. There's a lot of daylight here you can see with the Nasdaq. Maybe a lot, maybe so much so that we do bounce. But we're kind of retesting these lows. If you want to be optimistic, you can say this is short-term stuff. I'm not trading on this, but we have kind of come down here and just hacked around here for a few days. We're not really able to follow through. And if the shoe was on the other foot and we kind of rallied all the way back to the high and started chopping around up there, and then kind of fell down, it wouldn't look so good. So let's just see if we can find some support here. But as a trend follower, I'm not really getting that deep into it. It's just more, we're just below the moving averages, stuff like that. They're really all in gear at this point. S&P 500, retesting the low, chopping around the last few days. Small cap stocks, this is the IWM, retesting the low, chopping around the last few days. You can kind of just see everything looks pretty similar, retesting the low. I know some things dipped a little bit below the low. I think the Dow actually is a little bit weaker. I'm going to get into that in a second. But they all look pretty similar. Even the New York Composite, I think. New York Composite is the weaker one, yeah. The New York Composite and the Dow have sort of dipped here to new lows. So we'll see how that plays out. But as a trend follower, I don't get involved in specific levels. It's very obvious with indexes. It's easier just to follow the trend. So the first thing we need to do is just get some up action, and go from there. But so far, it is what it is. Outside of that, what I'd say I don't want to say interesting because it's painful, but the thing I notice most is you're finally seeing selling in the, it's interest rate sensitive, I guess, but it's also just all the sort of sturdy stuff is kind of getting thrown out. baby's being thrown out with the bathwater is what I'm trying to say. Really, this is the XLU. Now, I mean, net, it's not, compared to everything else, it's not a disaster. But it just fell. I think I saw something where it fell 15% in like 3 weeks, which is one of the bigger declines of the last 20 or 30 years or whatever. But even utility stocks are getting hit. This is IYR, which is the REIT, obviously, fund, from 98 here down to 80 pretty quickly in a straight line. So, if you could look at that and say, okay, now the bear is kicking in and all these other things, there's nowhere to hide. Or you could look at it like I said, the baby's being thrown out with the bathwater. We'll see how it goes. I tend to be a little bit more, I don't want to say optimistic. Down is bad, up is good. But they are coming around for some of the stuff. Just running through these aren't my type of stocks, but I know these are big names. This is Realty Income, symbol O, from 75 down to 58 in a few weeks. WP carries a big net. You can just see this almost kind of a mini crash for this sort of security. Equinix, I think, which was the big data center REIT, is clearly hitting new lows. So I'm just noticing a lot of that going on. On the other hand, I'm not just trying to say sunshine stuff here, but what I have noticed, and I mentioned this 2 weeks ago, here's XLP. It's kind of hard to see. It's not a huge, but it's a little bit of a lower low here, right below the June low in this fund. This is consumer staples, toilet paper, toothpaste, the stuff you have to buy. The stuff you want to buy, XLY, which is consumer durables, I think they call it, or whatever, you can just see it's still, decently above that prior low. I'm not going to make too much out of it, but we're just seeing a little bit more of that. If you look at some of the growth versus value ETFs, which I'm not a huge fan of, to be honest with you, but just as a comparison's sake, this is RPG, which is basically big cap growth. You can just see, again, short-term stuff, but it's kind of holding that prior low. You look at the RPV, which is big cap value, and it's not. If you look at IWO, which is kind of one of the growth funds I do look at, again, you can see it's, I don't want to say well above the low, but it's, it's clearly above the June low so far. If you look at IWN, which is the Russell 2000 value, it's not. So what does that mean? Usually near lows, you're going to have growth start to outperform. I'm not saying because of this, we're near the low. I just mean this is a process that you tend to see as a decline goes on. Not always, but oftentimes. You saw it in 2002, 2003, where the Nasdaq, was the worst performer, obviously, after the internet bubble, but then kind of bottomed out. So just kind of noticing that where you are getting some of the growth stuff. This is the mid cap growth again. This is a very illiquid ETF, but IVOG. But you can just see it's holding that low, whereas the the value one is not, or it's right at the low. So we're seeing a little bit of relative strength there. I think it's just one of those things where I would monitor it. I'm not saying because of this XYZ, but I noticed it a couple weeks ago. Here we are a couple weeks later, it's still going on. If all of a sudden it's Halloween and this is kind of becoming a trend, like all of a sudden we might have something more meaningful. But so far, I just want to point that out. In terms of individual stocks, again, yes, things did get hit. But I mean, I don't know. If you look at the weekly charts, I still see a lot of names that have the numbers, that have the estimates, that have the liquidity, and some that are just sort of turnarounds that look like they've bottomed. It doesn't mean they're ready to get going, doesn't mean they're buys, doesn't mean they can't go down. But this is Albemarle, ALB, we've mentioned it before. It's the institutional lithium play. It's still hanging around its highs. It's actually been etching. If you look at the daily chart, here's a high, here's a higher high, here's another higher high. And so far we have a higher low here, 250 versus 260. Again, it can come in on next week and get destroyed. Who knows? But so far, this thing's holding up pretty well. It's smaller peer Livent, which is LTHM, like lithium is the symbol. Same sort of thing, just kind of higher highs here. Big sharp pullback for sure. 35 to 30 is it's nothing to sneeze at, but actually still holding the 50-day line, okay? In the retail space, this is Academy Sports. I mentioned this a couple weeks ago. It's getting hit today because Nike is melting down. But net, again, you kind of look at the weekly chart. Is it ready to get going today or tomorrow? I don't think so, but could it be ready in 3 or 4 weeks if the market turns around? I do think so. And, you can just see clearly it's not like it's threatening, its prior lows near 25 or 30. It's just kind of hovering up in this 40 to 50 range so far. Wingstop I've mentioned, kind of like ALB and lithium. the higher high in September is something I'm sort of looking for chart wise, because the market did, just to show you, the Nasdaq, here's the Nasdaq, that was not a higher high, So if you see some growthy type names doing that, it's just something to flag. It doesn't guarantee anything. But again, still holding the 50-day line here, chopping around. We'll see what happens, but so far it looks like a pretty solid turnaround. This one's earlier stage in terms of, I guess that's a kind way of putting it, but this is 5 below. Earnings are coming in this year, but should rebound next year in theory. And it got nailed here, but it's been bottoming out since, I think that was actually back in April or so. It's been bottoming out, popped up here, kind of, so it's been putting in 4 or 5 months now of work on the downside. It's got this little, what I'm sort of looking for, I mentioned this again a couple weeks ago, is this latest retest in the Nasdaq. I just mentioned, it was 6 out of 7 weeks down. Are there stocks out there that are now 7 weeks into sort of fresh, tighter, more well-controlled launching pads? And the longer they can do that, the better. Again, doesn't mean they're going to break out next week or anything like that. And the market could eventually break them, but the longer they do it, the better. And so you're kind of seeing, here's 5 below, here's your 7-week structure here, while the Nasdaq and the market's been really coming down to retest its low. This has been, relatively cool, calm, and collected. It's below its 40-week line. I'm not that excited about it, but all of a sudden you get a good couple of weeks and it's hitting multi-month highs. It's like, okay, what's going on here? Biotech, still seeing some names there. Regeneron, this popped on news. I forget, it was a trial result, but anyway, 3 weeks ago, and just no real desire to give anything back. And this is even when you're seeing some of the defensive, I know it's interest rate sensitive, but some of the other sort of safe areas, they're getting clonked. But this one's holding up pretty good. Neurocrine Biosciences is tough. It's kind of sort of holding this 100 level. It's broke the 50. Now it's back above. It's still got work to do, but again, it's kind of in this sort of broke out and still holding. And all of a sudden, a good couple of days, if it happens, you're like, hey, this looks pretty good. So Shift 4, I've mentioned, this is sort of a new payment thing. Again, as the Nasdaq has done, just to show you on the weekly chart, kind of going all over the place here, but this is the 1, 2, 3, 4, 5, 6, 7. So this is your 7-week, retest, I guess I would call it so far, but new latest leg down, whatever you want to call it. So here's your 7 weeks down. Same thing with the spiders. You can't really see it as much on this chart, but 7 weeks down from that August peak. So it's kind of like what stocks are doing. So here's a stock that, it gapped on earnings. This is Shift 4. And here's your 7-week structure so far, still kind of hanging around the 50-day, 10-week line. And again, a good couple of days. I'm not saying I'd be buying a breakout or something, but if the thing can kind of show some strength, if it can show some strength on the upside, all of a sudden you're looking at multi-month highs and, it's above its moving averages. So you just kind of, there's a lot of names like this that aren't there yet, but they could be there if things went right. Paylocity, this is PCTY. It's a little not thinner. It's doesn't trade a lot of volume. It's a higher price stock. But big correction, bottomed out. I think I mentioned this before. Nice earnings, two weeks of good volume here. And again, here's your 7-week sort of structure so far. All of these, of course, next week, now that I record this, might fail. But seriously, so far so good with a lot of these things as we head into October and, earnings season for a lot of them anyway. Duolingo, DUOL, easy for me to say. I've mentioned this a lot. It's a little thinner, but it's just got this great bottom. It rallied, and this has actually been kind of basing out for, I think I counted it earlier, it was 12 or 13 weeks at this point. The relative performance line is starting to tick up. Again, it's a thinner, volatile name type thing, but all of a sudden a good couple of days, again, if a good couple of days, all of a sudden you're looking at possible multi-month highs. Here's a name, Netflix. Acts really well, actually. This is not for me. This just isn't my thing. Okay. Below the 200-day line and all the numbers aren't very good. Sorry about that noise outside. But you got to, again, this like well-controlled 7-week structure, good volume in here, good volume off the low. Here's a interesting turnaround. You have interest rates, mortgage rates at 7%, up from 3% a year ago or whatever. Well, here's D.R. Horton. Okay, this is the longest. Would be purely a turnaround thing. It's cheap. It's trading at 4 times earnings or whatever. So it's coming in here, but you can see it's I feel like that's holding up pretty well compared to its prior low, despite the fact you'd figure these stocks would be in the absolute toilet. But it's holding up pretty well. The ETF's a little bit weaker, ITB, but again, holding that June low. Just a couple more here before the lawnmower comes and gets me. But this is CrowdStrike. I wanted to mention, this is kind of what stuff I'm looking for, CRWD. It's below its moving averages. It's above its prior low. You go back on the chart, it's at the same level it was in January. And just to show you, the spiders in January were, let's see, even at that low, the spiders were here, okay? And now they're down here. So call it 430 to 360. Okay, CrowdStrike, though, is, at the same level. So to me, that's some relative strength. Again, you still need to see it get moving, but that's something to watch. And then Las Vegas Sands, I think I mentioned this a couple weeks ago. It did get hit, you can see, and then they loosened some restriction in Macau this week, and it actually bounced right back. It still just looks like a big bottoming effort. Yes, it could fail, but again, it's one of those things where the stock is really only a couple of good days from, being like, hey, maybe the turnaround is actually trending up as opposed to just bottoming out, okay? So that's not to say, now those are a lot of stocks. I could obviously find a lot of names that don't look good, just run through some banks or whatever, go look at some European banks or whatever. But, at the same time, you just want to keep your watch list fresh, and let's just see how it goes. Maybe this is the retest. Maybe this is our retest here, and, everyone's freaked out, everyone's negative, we're heading into October, and this is the bottom of the bear market, and we rally. I think it's possible. I'm not predicting that, though, because, for all I know, we'll bottom in March. It takes another 3 or 6 months, and the Fed and all this stuff. So just be ready for it if it happens, but don't get out in front of it. You want to be ready for whatever happens. Doesn't mean you have to predict it, okay? I do think there's, pieces in place for a meaningful, at the very least, a nice rally, if not something more. I'll put it that way. But you have to see it to believe it first. For now, it's all about being cautious, being patient, being defensive, and being flexible, keeping your watch list up to date. Okay, that's all the time I have for today. Thanks for listening, and be sure to come by again next week for another Cabot Weekly Review.